Welcome all of you in today's discussion journal entries and golden rule of accounts. I am Dr. Vikas Kumar, Assistant Professor, Department of Commerce, Government PG College, Obra, Sonbhadra, Uttar Pradesh. Today we discussing meaning of debit and credit and golden rule of accounting. All accounts are divided into two sides, left and right. Left side is called debit and right side is called credit. Debit derived from Latin term debitum means due for that. Symbol for accounting written as mentioned here. Debit. Credit derived from Latin term creder means due to that. Symbol for accounting written as saya. These are the meaning and of debit and credit and golden rule of accounts. Personal account, we already discussed there are three types of account: personal, real and nominal. The golden rule of personal account is debit the receiver and credit the giver. A person who receives, his account is debited and the giver account is credited. And the rule of real account is debit what's come in and credit what goes out. And nominal account rule, debit all expenses and losses and credit all income and gains. These are the golden rule of accounting for journalizing the transaction. Personal account, real account and nominal account. Debit and credit. In personal account, receiver is debit and giver is credit. In real account, comes in debit, any assets comes in the business, debit and goes out credit. In nominal account, all expenses and losses debit and all income and gain credit. Journalizing. Step to journalizing transaction. First, identify accounts involved in particular transaction. Any transaction, there are minimum 2 accounts affected. First, we identify which 2 account is involved. Identify the types of account, which types of account, either personal or real or nominal. Apply the golden rule of debit and credit of each accounting involved, personal, real and nominal. Identify the account to be debited and account to be credited. These are the process of journalizing. Transaction dated 21st July 2022 received from Virat. Received from Virat rupees 8,000. There are 2 account affected. First cash and other is Virat. If we receive some amount of Virat, then cash account is a personal account. And further, if we receive from Virat rupees 8,000, cash comes in, it will be debited and the rule of real account, debit what's come in, credit what goes out, and receive cash from Virat, so debit what's come in and cash account will be debited. And the rule of personal account, debit the receiver and credit the giver. Receive from Virat, so Virat is giver, hence Virat account will be credited. This is the format pro forma of journal entry, and we record transaction in such a format, that is 21st July 2022. So in date column we mention year first, then month, then date, and in particular cash account debit to Virat's account, and in amount column 8,000 debit and 8,000 credit. This is the method of journalizing the transactions. Being cash received from Virat is a narration mentioned in journal column. A step for journalizing transaction, we revise it, identify accounts involved in particular transaction, identify the types of account involved, apply the rules of debit and credit, and then identify the account to be debited and account to be credited. And paid to Ramesh, 20th July 2022, paid to Ramesh. So first we identify involved particular transaction. There are two accounts is involved. First Ramesh and other is cash. Ramesh account is a personal account and cash account is real account. The rule of personal account, debit the receiver and credit the giver, and rule of real account, debit what's come in, credit what goes out. Paid to Ramesh, so Ramesh is receiver, then debit the receiver, Ramesh account debit, and credit goes out, so cash account will be credited. Then journalize it in a journal format, that is first date 2022 July 20th, first year, then month, then date, and particular Ramesh account debit to cash account. It is from rupees 10,000 debit and 10,000 credit. These are the step of journalizing of being cash paid to Ramesh. Expenses paid rupees 5,000. In this, two account, expense and cash. Expense is a nominal account and cash is a real account. Nominal account rule, debit all expenses and losses, credit all income and gains, and real account rule, debit what's come in and credit what goes out. Then paid to expenses paid means debit all expenses, and real account cash goes out for payment of any expenses, so then cash will be credited. In journalized format, this is expenses account debit to cash account, or amount 5,000. These are the journalizing process of expense paid, where you can assume any kind of expense paid, salary paid, rent paid, commission paid, interest paid, wages paid, freight paid. So all expense debit and to cash, because cash is going out. Rent paid, rent to cash, salary paid, salary to cash account, commission paid, commission account debit to cash, rent paid, rent account debit to cash, interest paid, interest account debit to cash. These are the example of expense paid, being expense paid. Next, income received. In income received, there are two account affected, first cash and second income. A cash is a real account and income is a nominal account. The rule of real account, debit what's come in and credit what goes out, and rule of nominal account, debit all expenses and losses and credit all income and gain. Income received, cash comes in, hence debit what comes in, debit cash, and income is all income and gains credit, then income is credit. The journal entry for this, cash account debit to income account. For example, if dividend received, interest received, commission received, discount received, we journalize the transaction cash account debit to rent account, cash account debit to interest account, cash account debit to commission account. These are the example of income received. Being income received is the narration. Expenses paid. Earlier we take into consideration expense account debit to cash on the basis of journalizing. These are the step. Expense account debit to cash account 5,000. And these are the symbolic. For example, rent paid, rent account debit to cash. Wages paid, wages account debit to cash. Interest paid, interest account debit to cash. Dividend paid, dividend account debit to cash. Freight paid, freight account debit to cash. Carriage paid, carriage account debit to cash. Commission paid, commission account debit to cash. Postage paid, postage account debit to cash. Office expenses paid, office expenses account debit to cash. Salary paid, salary account debit to cash. Rent paid, rent account debit to cash. These are the example of expenses paid. Clear? Okay. Income received. In income received, there are two accounts, cash and income. Cash is a real account and income is a nominal account. Debit what's come in and credit all income and gain. So cash account debit to income account is a generalizing entry. For income point of view, if transaction given rent received, cash account debit to rent received. Interest received, cash account debit to interest account. Dividend received, cash account debit to dividend account. Commission received, cash account debit to commission account. Rent received, cash account debit to rent account. Interest received, cash account debit to interest received. Dividend received, cash account debit to dividends. Cash account debit to commission received. These are the example of income. Thank you one and all for patience listening. Try to understand and practice from any book. Thank you.